What is going on, everybody, and welcome to another weekly update. And in this update, what I like to do is provide you guys some upcoming earnings, some upcoming events to get you prepared for the week ahead. That sounds like something you're interested in. Consider subscribing, as I do also provide a technical analysis for the week for your entries and exits, and look at some of the stocks that I am potentially looking to trade for that week. Also, you can check me out at Hemi137 on X to get a daily pulse of the market, as the market is very dynamic and a lot of things can change from day to day. So, before we get started, remember to go ahead and smash the like button, get the word out, and let's dive straight into this week, as this week is going to be filled with information on tons and tons of very vital information going into just 2 more weeks away from a very big election, as we are all well aware of. There's been a lot of things going on in this current economic environment, and we want to be able to take advantage of that. So that's why I do 2 videos. I do believe you should essentially mix events, schedules with technical analysis. It helps you understand when to apply a lot of risk, and that's why I use both of them, and know when to and essentially enter into a stock and when to exit and what sectors. All that kind of breaks down easily when you start looking at events. And again, current events, we have a lot going on. And so, do you really want to be applying a lot of risk at the top of a potential bubble? And that's what we're discussing. So, with that being said, let's go over the last week. Now, I've talked about this. We are getting full blown earnings mode. We are going to get pummeled with information, and we're trying to catch a lot of the really important information. A lot of it can be noise. We can miss some information, but this is again why a lot of information comes in waves. This is why it's all strategically planned, and this is why I essentially do this channel, is to try to capture what is important, decipher what's important, understand that essentially what holds weight really depends on the economic environment, and understand it's dynamic and it changes all the time. And so, to be able to make sense of all that, that's why I do this, is to not only help my thought process, but to hopefully provide you the right guidance in moving forward. But again, none of this is financial advice. So, let's take a look at this previous week and see what's been going on. Obviously, we've had some great earnings coming up. We'll continue to have that. Like I just stated, uh, essentially, what you're looking at is elections is only 2 weeks away. Not only are you going to get some really big earnings between this week and next week, next week is our Super Bowl week of earnings. Keep that in mind. You'll also get some big data coming out again next week as well. You get another big last non-farms before you go into the election, and then that's not including all the election noise. The next 2 weeks for the election, the weekends are going to be extremely important. We've got some massive bombshells that have been going off over the weekends going into this election. I can foresee that continuing to happen going into the election. So just keep that in mind, and also always remember is that if anything happens domestically that can make a huge impact on the market, you can strike a lot of fear into the stock market by watching essentially anything again occurring domestically. So, earnings breakdown this past week. Let's focus back on last week, take the information and see what we can do with that in going into next week. So over the past week, we've had some really huge earnings. We had Netflix. They obviously had a massive beat, essentially coming in roughly around about 600,000 new subs they've got over the past week. Now, this is something they've talked about removing, because eventually this number isn't going to be so hot anymore. Again, I always like to bring this one up because it shows you where the consumer is at. If these numbers are high, subscription counts are high on Netflix, that essentially means that people don't have a lot of excess cash, which we've shown over the past several months. And then ultimately understand that, again, they are in a very weak condition to go out and be traveling, to be picking up any other expensive hobbies. Netflix is cheap entertainment. People are trying to buy time till essentially this thing blows over. Again, that's what people look for. And again, I do very much believe we are in a depression. I believe we're in a global depression, as we're watching essentially the international field get absolutely obliterated, and we're seeing China get obliterated. and Europe. But again, a lot of these data sets that I point out are all leading cases into that. Understand that the data that typically gets reported is very lagging, and so you go off of earnings breakdowns. And so this is why I like to bring up Netflix, but again, they're going to be removing the subscription count. I don't know at what points, but as of right now, we're still getting it. So that gives us great insight, and it still feeds into our thesis that, again, the consumer is weak, cheap entertainment, and we're watching for other earnings to essentially prove our thesis. So TSM. Now the 54% jump in net profit. Sales were up 36% year over year in Q3. TSM Semiconductors is essentially blowing it up. And what I've also seen over the past week, I don't have that on here, but essentially Tesla has also purchased tons of GPUs, and they essentially installed that in like historic time. I guess they installed it in like, I think 16 or 19 days. And essentially, Jensen, the CEO of NVIDIA, was essentially calling them out, saying it's superhuman what they're doing, because that would should have taken them like 4 years, but they essentially set up a humongous data center as everybody. And one thing also that has come up is over the past week, tons and tons of big companies, Google, Amazon, right? They're all purchasing or trying to get into nuclear plants to be able to feed the energy source that you're going to need to be able to power AI. There's massive amounts of energy, especially when you're talking about the data models that are needed to power these massive AIs. And so that was a huge thing. And so it feeds into that thesis with TSM and NVIDIA doing so hot going into the future. Again, I do believe they will at some point, but again, I do believe there's some pencil whipping going on there, especially when it comes to NVIDIA, because I think a lot of people, given the current economic environment, a lot of these companies just don't have the money for it. So they go massively in debt to try to get ahead of everybody else. But on the same token, I believe you're fighting a Cold War against China and against Russia at the same token. So I do believe there's some shady stuff going on there, but again, that is not proven as of yet. So we have to go off of headline news or what's actually being reported from these companies. ASML expects a 50% drop in demand. Again, another chip play. The semiconductors are more important in that aspect, so you do have to keep that in mind. ASML got absolutely ravaged this week. We'll see what happens with Lam Research, as Lam Research is coming out as well this week. So that will be important for more chip information. Again, we have to wait and see. I think this is why I say you have to go with industry leaders, because industry leaders will do really well. These smaller corporations will get absolutely slammed, and that's what you need to be careful of. They will eventually recover, but again, all that revenue is going to go into these big industry leaders first, and that's why I always say when we have this economic downturn, when it essentially gets priced into the market. You can't say it's priced in. A lot of people like to say that. It's true to an extent, but you have to understand it's not really that true, because when the actual real event hits, it does occur and it does play out. And just because it's priced in, it may maybe soften the blow a little bit, but ultimately, again, it's all depending on fear, because when we start having to cut at a rapid rate, you will see the massive amount of manipulation that's been going on over the past year and a half in the next couple months. And so you have to prepare for that. And so this is why it's important to know what you want to invest in, and those particular list of stocks and cryptos that you want to be essentially invest in, and ultimately, again, understand that it's not going to be priced in, that I do think it'll correct. It'll take some time to correct. It could take a year, it could take 3-4 months. But again, the stock market will recover a lot faster than the housing market will unfold over the next several years. So you do have time there. But the market, you have to be prepared for the next couple months, and it will correct, and you got to be quick. You got to put DCAing. I think this year will definitely be a strong year to be DCAing into those stocks when they're selling off. You want to be buying into fear, not buying when the market's topping out at the current state in which it is right now. Because eventually the money printer will have to come on, because that's the only way they know how to protect themselves. And then you'll get what you're currently seeing in China, and hopefully essentially you haven't caused such disinflation that the market just continues to free fall. But that's currently where we're at. So So some good earnings thus far, but we have also got tons of information coming out. Meta has essentially fired 24 staffs in LA using a 30. I think this is actually 25, not 20, 35. I think that was a misprint on my behalf, but they're 25 meal credits to buy household items, acne pads, wine glasses, laundry detergents. So these people that are essentially have $400,000 careers annual salary in their careers essentially got essentially let go because it's not enough. You have to understand California taxes and everything else are still also very, very expensive, in that you're being let go because of a $25 gift card because you can't even afford things is a huge problem and a huge red flag. And if you don't see the red flags already spelt out, these articles will definitely show you that. And then you also have Amazon says employees are welcome to quit if they don't want to return to the mandated office or returning to office that's been mandated. So again, Amazon wants to get out of having to dish out severance packages. Again, they did a lot of trimming of fat over the past, I want to say it's been about 2 years now. That's when essentially Amazon bottomed. They have recovered because they've done so many layoffs. But at this point, it's like, well, we have a lot of good engineers. What's the only other way to get rid of good engineers is to essentially, well, if you don't want to come to work, you can quit, and then we don't have to pay you severance packages. So that's essentially where Amazon is at this point. And then now, BA has been warning, Bank of America warns that gold may be the final safe haven for U.S. Treasuries facing risk from the rushing national debt. Again, our Fed has told us months ago we can't sustain the spending that has been going on, the trillions of dollars spent every 90 days. You wonder why the market is going up. You wonder why the data of the essentially the GDP numbers that have been going up, the revisions of going up for the job numbers, is because of government jobs. The regulators are regulating regulators because there is no actual production being created because there is no jobs. If you lose your job, it is extremely hard to find a job out there because there's no new jobs, because people can't afford these companies can't afford it because, again, their operating margin is low in general. Inflation is high, so they have to take into account of all the inflation. Then you have a lot of employees that want wage increases because inflation is high, and essentially going on strike and forcing the hand of these companies. And so what happens is they, in turn, okay, you win, but now we have to lay off another 10,000 more people because we can't afford. So now instead of working the job of one person, you're working the job of 4 or 5 people because, again, you want higher wages. And so again, it's a vicious cycle. And again, the underlying problem is the debt-based system. Is nothing else. Yes, there is some greed involved, but it's on both sides of the table. It is in the corporations, it is in the government, it is in a lot of other sectors. But you have to understand, this is the issues of the debt-based system, and this is how it works. And this is why this broken tool for essentially rates exists, because it adjusts whether people get hired or not on essentially the maturity of these loans. If I can, increase the interest rate on these loans, then essentially that drives down demand. And if I lower interest rates, essentially drives up demand, which essentially employs more people. And so you have to understand how this tool works. And right now, even though we've dropped 50 points, it's not enough. You have tons of loans that are coming to maturity that are coming from almost a zero base interest rate loans to now paying the 4.75, I believe is what it's sitting at right now. And so it's still very, very high. So it's still a very dramatic difference. And you have a lot of mature loans coming out next year, more than we've seen thus far. And if you think it's bad now, it will get way worse in the next 6 months. And so with that being said, this is why you're seeing like Amazon and Meta doing these very wild things to get people laid off, because they're looking for any excuse to continue to trim fat. And it's pretty much gotten down to details at this point. And that is what's the mind-boggling thing about the whole thing. Layoffs, these are just some of them. I couldn't even list all the ones that we've had, but PPG plans to lay off another 1,800 people. Airbus sheds another 2,500 jobs. And then this is really important. This is something I've seen. Fannie Mae CEO says she's never seen a housing market like this before. Now, what exactly does that mean? Is that housing prices are so high, essentially compensating for more than 50% of a person's wages, which is, it hasn't been that high in over 2 decades. And so this is largely concerning as, again, people are going to, like I just said, people are going to continue to get laid off for almost insignificant reasons. And because, again, corporations, operation margins, they have to remain profitable or they're going to go bankrupt. Everybody's in survival mode at this point, right? And so people are price gouging on homes. You have to understand the supply is building up on houses. You're seeing more and more houses come online because people need money just to survive. This is why the homelessness is skyrocketing at the moment as well. And so you have all these things playing out. Oh, and guess what? You still have a banking crisis going on. First National Bank of Lindsay of Oklahoma failed and has been seized by the FDIC. This was essentially released after market close late yesterday evening. I'm recording this on Saturday morning. Yes, you are very much in a banking crisis that's been going on for over what about 2 years now, a year and a half now. And they've been bailing out banks until they are just trying to keep essentially those um, talking statements for the election. That is the only reason it's being held up right now. Now, you just had the Fed last week state that be prepared for a lot of bank runs. Here's your next bank. A lot of these mid to small banks aren't going to be bailed out. There's specific banks that they have to make sure cannot go under because of the fact that if they go under, the whole system will collapse. And so they can't allow that for these probably the top 5 banks. There's a list of specific banks. You can look this up that they have to support them no matter what. And they can't continue to do that. They can, again, this utopic view I keep talking about, they have to manipulate it to be able to make sure that the data sets, the talking points are still there. And so they manipulate it as best they can. They stop reporting on certain things. I talk about this. This happens all the time. If you are in the market at all, you see this happen all the time. You see the manipulation in the stocks with the movements. You see the headline news. There's tons of other resources out there you can read about. The Fed has tons, essentially, of charts that are never reported unless you actually go on there and look at the charts about the charge rates that are skyrocketing, that we haven't seen skyrocket as fast since the great financial crisis, which, again, they've been accelerating over the past couple months, which essentially people just can't pay anymore. They can't pay their credit cards. So what essentially happens is you can't get these debt collectors can't go after them anymore. And so that's what you're seeing that's why these charge rates are so important. And you're seeing that starting to skyrocket as more people are filing for bankruptcy. And this is why you're seeing homeless numbers skyrocket as well. And so now here's another bank. It was just months ago we had some bank that was advanced talks of being acquired, right? There's a lot of stuff that's going behind the doors that is not being reported in headline news. And so this is all leading to next year is going to be catastrophic. And again, depending on who's in there, I mean, it really doesn't matter who's in there. That's why, again, they said there's not prime candidates in there because they know what's about ready to happen. And it's not going to be pretty. It's going to get a lot worse by that point. And again, you still have, again, all the, essentially the dock workers as well, that you have a new contract that's going to have to be established in January, which is going to be massive. So again, you're going to see a roaring back of inflation. It's not going to let, this is the biggest problem. It's not going to allow the Fed to just keep cutting rates. So that, what does that exactly mean? Is that essentially employment's going to continue to get walloped over the next couple months, and it's not going to be pretty. You're going to have massive volatility in the market after, essentially, right after the election, which is only 2 weeks away, and it's already starting to fall apart. Is our concern here. So this upcoming week, we also do have the Beige Book is coming out, which will be important because it's going to talk about the next, essentially, we are, I think the 7th is when we have our next monetary policy. It was up at 50, but now it's down to 25, I believe. That can all change. We've seen how data sets and events can dramatically change that. Again, on the last one, we were pretty solid. It was going to be 25, and then the closer we got to it, it turned into 50. Or it seemed like the next 2 weeks. This next 2 weeks is going to be really important on how much that changes as far as the rate decision coming into November. So the beige book is going to be important for that. The volatility, we'll have to see what it says. Again, we're not getting any projections on this one. That doesn't come out till December. That will be important because it's going to give us projections on the new year about, again, the first two projections are really all that matters. All the other ones really don't matter because, again, that can be adjusted like we've seen over the past couple months, and how rapidly that can change just depending on data sets and events. So monetary policy is on the 7th. The core is on the 9th. So these are all after the election on the 5th. So keep that in mind. Once the election, once all votes are in, then it's game on. At that point, you don't have to filter anything at that point. And that's the concern, is that maybe not directly after the election, but probably in another couple of weeks, another month, things just start rapidly falling apart. So you can definitely guarantee in the new year it will rapidly fall apart because, again, there'll be whoever the new president is at that point, then it's fair game. And so, again, you normally have a massive rally at the back half of the year. I could see them at least trying to extend it to that point, and at that point is just fair game. So we're going to have to watch and wait and see. So upcoming earnings, we're going to review the calendar for that. Again, we're starting to get some major earnings, so there's a lot of earnings to really be watching this week. Expected moves, index, obviously, like I've stated, if you have like any major event, like when it comes to monetary policy or something, like next week, we have non-farm, so this will creep back up, but it's getting back down to normal levels. So the market really is expecting a lot to happen. You don't have any big tech earnings that like Apple reporting this week, so that doesn't have a huge, if anything bad really happens, it's not going to terribly impact the index, but like I said, you're really getting into some massive news coming here. So if you get a big event that can change this is the time you could really take advantage of options on the index. If some major event happens, the market just starts randomly selling off. This is why I include these expected moves. Tesla's reporting earnings, it's almost tripled what it's always been, which is insane to see. And then you have Boeing, which is a little bit higher than normal. Boeing really doesn't move that much. The fact it's even up higher, I think they are also reporting this week as well. So you do have earnings week. Again, JP Morgan's already reported, so it's back down to normal levels at 4. So that is just the report. Again, there is a lot going on this week, so we really have to pay attention to the best we can. And again, you are just 2 weeks away from the election, so there's going to be tons and tons and tons of noise. So we're trying to capture all that and really look at what really matters. So again, you have a lot of smaller businesses. Again, we lost a bank. You're having more bank earnings, especially this one on Friday. This New York Community Bank is concerning because this has been one that's been really, really highlighted as another one that could potentially fail. It is reported on a Friday. Look at that. So again, we just lost another bank, so we'll see what happens there. But let's start this back out on Monday. None of these, again, you have a lot of financial ones. A lot of these could be a problem. I think the stronger financial ones, we did get that failure. So we'll see how these banks do. They've released the failure on that one bank, so that's not a good sign. Especially a lot of these smaller ones are kind of mixed in with some of these bigger. A lot of these smaller bank reporting is being mixed in with some of these bigger earnings, so they're trying to kind of hide some of that, in my opinion. So we'll see what happens going forward. Again, it's this Saturday morning, so a lot can occur over the weekend. A lot of big events could be occurring over the weekend, so we really got to pay attention to that. But again, Monday, a lot of financials. Be looking at banks. We'll see what happens over the weekend, but reports over the weekend. But again, Monday will be a big day for banks, so we need to keep an eye on banks and see what goes on, especially after a reported failure. Then Tuesday, we have Verizon. Not really expecting much from that. GMC, we can expect some massive destruction coming from GM. The automobile industry is getting absolutely ravaged, And again, well, they're one of the worst ones, expecting that to get absolutely obliterated. 3M might do extremely well. GE, I think, will do very well as well. Any kind of energy plays supporting AI infrastructure is going to still be strong. Any kind of cybersecurity, Lockheed Martin defense should do really well as well. Um, Texas Instruments should do very well. And then Enphase is debatable. I don't know. They haven't been doing the greatest. We'll see how Enphase does. Enphase is like a hit or miss, so I'm not really watching that one too closely. BA obviously is going to be important. We don't know why it's still at 160, but it is. So we'll see what happens there. And then you have Coca-Cola, which is normally always very strong to watch and see, but we'll see what happens with that one. Next Era Energy, this one's been kind of doing very well because of essentially the plays for not lithium, but essentially I can't even remember the material for nuclear plants, but this one will be a big one to watch for that one. The word eludes me for some reason right now, but that will be a strong one to be watching for that energy sector, because that energy sector is massively getting a lot of attention as of right now. So then you have Tesla, which is a big one. They obviously had the Robo Day just last week. A lot of very futuristic. A lot of people don't like the super futuristic stuff, but we've seen how popular the Cybertruck is. Cybertruck came out. Yeah, they didn't have a great display when it broke broke the windows, but nonetheless, and again, very futuristic. It takes a lot of time. It's very shocking. When you have any kind of shocking things, which a lot of things that Tesla does, the initial shock a lot of people don't like, but I think it will start really sinking in over the next couple of years. But again, they do have a lot of competition when it comes to FSD, when it comes to Google and their FSD. But again, ultimately understand Tesla makes it look a lot better. The fact that the problem could be is that Tesla needs to expedite that a lot quicker than what's actually coming out, but it is much cheaper, which is efficient, which is why Tesla has always essentially dominated the space and will continue to dominate when it comes to technology. So that would be a good one to watch on Wednesday. Lam Research will be important. IBM will be important. Again, all these are going to chips or AI infrastructure will always be extremely important. ServiceNow could be in trouble. We'll see what happens there. I didn't see this one either. General Dynamics will be good for defense. Will be very good. Cybersecurity is going to be really important, especially with the global tensions. American Airlines, expecting this to get absolutely pummeled. UPS is going to be extremely important. Going to continue to watch the downfall of that. Southwest, watch that gets smacked down. NASDAQ might do really bad as well. A lot of people are gambling in the market, but who knows? They may do pretty well, because at this point, when people are at their lowest point, they will do some sort of gambling, but they're running out of liquid cash very, very quickly. So it'll be interesting to watch there. Tractor Supply, continue to watch that get absolutely crumbled. I think we'll see there as well. And then the rest of these, Western Digital will be important. Texas Roadhouse, kind of get an idea of what's going on there. And then again, Friday, this community bank, there's been a lot of speculation about this bank. We'll see if that one goes under on Friday. That will be important. Piper Sandler will be important. So yeah, we have a ton of, again, really big earnings, and we're not even getting into the meat and potatoes of this thing yet. I'm sure we'll get a lot of really useful information. There's a lot of great earnings, but they're not like pure market movers. Like Super Bowl week of earnings is next week, and then right after that, you're going to have election week is going to have a lot of big earnings as well. Expect big earnings over the next 3 to 4 weeks, and that's not even including NVIDIA earnings. Once we get past the election, I think NVIDIA will be pulled back into Super Bowl week of earnings. I don't think it will be pushed that far out. Again, they try to push it out, so it's kind of delayed a little bit more, so that way if something bad happens in the earnings, they Apple have a bad earnings, the whole market can gap down overnight. They're trying to prevent that, especially during the last couple of weeks of election. Once election is done, it is fair game. You'll see a lot of adjustments happen after the election, and that's what I've been alluding to this whole time. Is the adjustments will occur after the election. There is no once a vote is cast, it doesn't matter anymore at that point. So you do have to keep that in mind. So, with all that being said, have a great day, and I will see you guys on the next one.